Hey everybody, it's me, Gregory Mannarino, back for my lovely post-market report on this exceedingly lovely day. Tuesday, April 24th, 2018. You know, for a lot of people, wasn't too lovely, but for me and for many of you who wrote to me all day and commented, well, you had a lovely day. This position literally ripped the face off of this market. Congratulations to you if you got in on that. Now, look, this was no miracle here, people. I went over the last couple of days how that new charting system that you can use for free without signing up or anything right on my website had a nice sell signal there. So if you missed this and you looked at that chart, I don't know what to tell you. It also nailed this surge in Bitcoin. Take advantage of that charting system, people. I'm going to leave it there for you. You use it if you want to. Don't use it at your own peril because there is a ton of money to be made in this market. So let's cover that real quick. So today, no secret, stocks got hit hard, like a 700-point swing in the Dow Jones Industrial Average, finished to the negative over 400 points. Now, I do not believe that selling pressure is over. I want to cover some of that. I am not saying that this market isn't going to bounce tomorrow. I have no idea what it's going to do tomorrow. That's the truth. But the trend here is lower, and here are the reasons. First of all, did you get any time today to watch the Confederacy of Dunces over there? You know, Bloomberg and CNBC. They are baffled. They do not understand that they can't put it together in their heads why the market would sell off when we're getting all of these really good earnings coming in here. Well, let me enlighten those on the Confederacy of Dunces channel, because I know a lot of you watch this. And here's a little light for you. The reason why stocks sold off today isn't so much about this line in the sand that you want every one of you out there want people to believe that there's 3% on the 10-year. No. Here's the key. And I want everyone to pay attention to this. It's really important. So, yeah, earnings are coming in real good. However, that yield curve flattening out, that's telling us something that the economy is slowing down. So my take, this guy sitting right here, the reason why stocks are falling in spite of good earnings, because this is probably as good as they're going to get. That's the truth. Think about what I just said. Earnings are coming in real good. Stocks are selling off. It's not about the line in the sand. It's about the yield curve telling you and telling me and telling the Confederacy of idiots, you know who they are, that earnings, yeah, they're probably topped out. I'm not saying this for a fact, but I can tell you as a market player, for which all of you know I am, that's my take on it. And what does that mean, people? Pressure remains here on stocks regardless of what they might do over the next day or two. Now, I closed this position. I told all of you when I did it in real time. That does not mean I'm not going to re-enter it again tomorrow. I want to see what the market does. I want to see what the market tells me. You got to be willing to adapt and change really quickly. Look what happened earlier today. Earlier, when I did my video, the Dow Jones Industrial Average was up triple digits. Meanwhile, actually, as a matter of fact, we were at the 3% on the 10-year. It did back off. And that's not the problem here. It's not the psychological level. See, that's what the Confederacy wants you to believe. The Confederacy wants you to think that it's a psychological thing. Yeah, the market is psychotic. There's no doubt about it. Maybe I'm a little psychotic too. However, this is not about a psychological level. This is not about a psychological freaking level. This is about earnings possibly topping out because the yield curve is screaming at us, hey, there's a problem. But you see, here's the deal. The Confederacy, the freaking Confederacy, they don't want you to know that. Oh no. They're probably telling people they should be buying this dip. And when it goes south further, do you think maybe they're going to take responsibility? I doubt it. So there's the truth for you, my lovely friends and my lovely lions that I sincerely do love very much. And I actually posted that on all my my social networks. All right, so that's the story here, people. Keep your eyes on that freaking bond market. Watch the spread between the 10-year and the 30-year. I'm going to show you how to do that real simple. You have one of these silly phone things here. Okay, download the CNBC, Confederacy of Dunces app, okay? And just, kind of looks like that, right? You're going to click on that, okay? And then you're going to go on the bottom, it's going to say markets, okay? You're going to click on markets, got it? Okay. And then you're going to go to the top there, and then you're going to scroll. Oop, let me get you back on here. And you're going to scroll over to bonds. See where it says bonds? You're going to click on bonds. You see? And then what you're going to do is you're going to scroll. Oh my God, I'm out of my mind, aren't I? You're going to scroll. And then you're going to look for the 10 and the 30. Ooh, let's see if I can show you that. You got that right there? So U.S. 10-year yield 2.998, 30 3.177. Watch that spread get narrow. Watch the 30-year start to yield less than the 10, and that's when we have an inversion. I'm not saying it's going to happen tomorrow, but you and me are on inversion watch. So anyway, in summary, stocks sold off today despite good earnings because I think that yield curve is telling us all the economy is going to start slowing despite what's coming out of the mouth of our president. Okay, don't ignore most of the things that come out of his mouth. That's the truth, especially when it comes to the markets because he's got to blow sunshine right up your crack. So we're going to ignore that. We're going to watch that yield curve. That's the key. That is the freaking key here. Earnings might have peaked out if this yield curve is telling us the economy is not going to be doing too well. And this global, here's another thing. I know this is getting kind of wordy here, but the Confederacy, they're still talking about a recovery. The global recovery. Really, the global recovery. Oh, you mean how the stock market is now at very close to all-time record highs? It's still a recovery. Oh, I don't get it. I just don't get it. But that doesn't matter. For you and me, it's about making this whole thing work. It's about weaponizing this market against them. Because you're not going to lose on my watch. It ain't going to happen. Speaking of that, go to my website and start using that darn chart that I set up for you. It's all set up for you. Everything you need to know is right freaking there. And if you want to get really fancy, go check out my publications page. But start somewhere and start utilizing that resource. It's free. You don't have to sign up. And if you're not using it, there's something wrong with you. And there's something wrong with me too. All right, with that said, I will see all of you in the morning. Over and out.